We begin our report with the abrupt closures of 3 banks in a matter of days that are now sending shockwaves across sectors of the economy and raising concerns about the U.S. banking system.
We start with the troubled global banking sector. European markets have closed down more than 3%, spooked by a major sell-off of shares in the Swiss banking giant Credit Suisse. Coming days after the collapse of the US-based Silicon Valley Bank, it's prompted fears of a full-blown crisis in the sector.
Banks in the US are collapsing one after the other. 4 banks have already collapsed, and the 5th one is about to. While the entire Western media went gaga over the Adani-Hindenburg episode, they knowing or unknowingly failed to shed light on what's happening in their own backyard. Let us see how each of these banks fell. The first bank to collapse was Silvergate Capital Corp. due to the downturn in the cryptocurrency industry. The bank had heavy exposure to crypto exchange and hedge fund FTX, which went bankrupt. As a result, the bank suffered heavy losses with deposits and share price hitting rock bottom. Depositors are now trying to withdraw money by selling their property, and the bank's operations were closed on March 8. The next was Silicon Valley Bank, the 16th largest bank in US that acts as bankers to startups and venture capitalist firms. The Fortune magazine had ranked it among America's best banks for 5 years straight. However, the bank collapsed due to multiple factors. Many of SVB's depositors were startup companies. They deposited large amounts of cash from investors because tech was in high demand during the pandemic. Silicon Valley Bank invested a large amount of bank deposits in long-term US Treasuries and mortgage-backed securities. When the Federal Reserve hiked interest rates in 2022 to combat America's 40-year-old high inflation, the value of their bond portfolio started to drop. They did not protect their liabilities with short-term investments for quick liquidations and hence faced a liquidity crunch. Due to the economic factors, venture capital started drying up as many bank customers withdrew money. As SVB did not have the cash on hand to liquidate, they started selling their bonds at a significant loss, which caused distress to customers and investors. When SVB announced their $1.75 billion capital raising on March 6, many got alarmed that the bank was facing liquidity crunch, triggering a panic withdrawal. SVB's stock plummeted and the California regulator shut the bank down on March 8. Signature Bank faced a crisis on March 12 when investors started withdrawing large amounts of money, anticipating a crisis in the bank sector, causing the bank to run out of money. The most stunning of all was the collapse of Credit Suisse Group. Credit Suisse has earned itself a dubious reputation owing to tax evasion, frauds carried out against its own customers, money laundering, kickbacks, and several other offenses. In February 2022, a massive leak of more than 30,000 bank customers revealed that Credit Suisse harbored hidden wealth of clients involved in torture, drug trafficking, money laundering, corruption, and other serious crimes. The bank declared a massive loss of $1.6 billion in 2022, which was higher than the profits it had made during the previous decade. Its share prices nosedived on 15 March, taking the company's fortunes down with it. Ironically, this very same Credit Suisse had assigned downgraded Adani Group bonds following Hindenburg allegations. The US banking crisis exposes the fragility of the global financial system, caused by endless quantitative easing by the US Fed, distorting financial markets, the real economy beyond recognition, causing massive inequality and other social ills. This hyper-financial regime of debt-driven growth has proved to be unsustainable. Unlike the US, India did not fall into the cryptocurrency trap and has discouraged its trade with a 30% crypto tax. Unlike the US, India is focusing on capital-driven growth instead of going for debt-driven growth. India is strengthening its economic fundamentals by carrying out long-pending reforms in the banking and corporate sector. The Asset Quality Review in 2015 brought out hidden NPAs, strengthening the Indian banking sector. The insolvency and bankruptcy code has resulted in disciplined borrowing amongst companies. Bank mergers and other reforms has turned around the fortunes of public sector banks. In financial year 2022, the PSBs have posted a profit of Rs 66,539 crore despite the pandemic pressure. The share price of these banks, which were once at rock bottom, have surged to 52-week highs. The effect of the US banking crisis will have minimal effect on India as the country has insulated itself from external factors through robust internal growth, thanks to the government's prudent handling of the fiscal and monetary policy.